Welcome to the Reverse Mortgage Podcast. I'm Bill Gross, at Bill Gross Probate on social media. We get together regularly to talk about reverse mortgages with the best practitioners in the business. One I'm really lucky to have here today is Nina Penny, who has simplereversemortgage.net as a website and as a reverse mortgage pro. Nina, thank you so much for joining us today.
Thanks for having me, Bill.
One of the things I noticed right away is that you have your designation CRMP. Can you describe what that means? I believe it's Certified Reverse Mortgage Professional.
Professional, exactly. There's right now about 150 to 160 who have this designation throughout the country. It is a designation by NRMLA, which is the National Reverse Mortgage Lending Association, credentialed. Basically, you have to do so many reverse mortgages. You have to go a background check, have letters of recommendation, and have done so many loans and take a test to earn the credentials.
And one of the reasons why I reached out to that organization to find guests for this podcast is as a professional, I know there's a difference between if I ask any mortgage originator in the country who may have never done a reverse mortgage, maybe can't even spell reverse, can you do a reverse mortgage? They almost all will say yes, and 90% will do a terrible job. And
True.
yet the qualifications for yours, this is not just a program that gets sold. You have to like really do actual numbers of loans and they actually verify your production.
Correct.
Yeah.
Correct.
So good. So I guess I make that important distinction when we start from the beginning. So let's talk about the reverse mortgage product. I think that having been a producer a long time ago when it first came out, there was a lot of fraud with the original versions of reverse mortgages that have been corrected. And I think to this day has a lot of the negative connotation to it overall. But really it's a very powerful tool. So I guess one of the questions I'd ask you is, obviously people call you and say, I want a reverse mortgage. That's an easy question. But when people don't know that's the product that's right for them and you recommend it, you must see the same I do, sometimes some pushback. How do you explain the product and its evolution?
I think one of my realtors said it best is that this is not your parents' reverse mortgage, meaning that this product has really evolved since the 60s. It is not that product anymore. Today, we look at a reverse mortgage primarily just as an FHA loan that you don't have to make payments on. You just have to pay taxes and insurance and HOA.
And then it has additional benefits, perhaps, of either taking some equity out regularly, the monthly installments, or having a line of credit you can access later, built into the same loan.
Yes, how you utilize the funds is totally up to you. So you can use it any way you want. You can take it when you need it. You can leave it in the line of credit, which has an incredible growth rate to it.
Right.
You can take it as a monthly payment, or you can set it up for a year for so much amount of money and then reduce it or increase it. It's your money. How you use it is totally up to you.
I think that part of the challenge is the it's so powerful and it's complicated that
Mhm.
people just look for, it's like reaching for a tool that'll get the job done rather than really saying, well, how can we really use this as part of our structure?
Mhm.
And that gets down to, understanding the product in its details rather than just issuing loans. So let's
Mhm.
talk a little bit about the product and how you get involved with it. What
Okay.
percentage of your business of reverses is purchases, which I'm guessing is really small, versus more standard reverse mortgages?
I would say 40% of my business is reverse for purchase,
Wow, whoa,
which
whoa,
is,
whoa, whoa. 40%. That's a big
yes.
number compared
Mhm.
to most originators.
Yes. And
That's a
I'll
good
tell
thing.
you, yeah, and I'll tell you why really it is because I work a lot with real estate agents and I present to a lot of real estate agents and I explain to them, when to introduce it, how to introduce it. A lot of them will just call me and say, you're on speaker. But I think it's also educating realtors of how this product can work.
Mm.
I think that is really powerful. I have realtors who sing the praises of reverse mortgages and bring it up, comfortable to bring it up. And I think that's why I've done a lot of legwork in 12 years to get there.
Well, that's why I'm glad to have you here because I know that so many of the realtors I work with aren't even aware of the product. And I just feel like, particularly when people are older, they might be buying their last house and let's get it set up correctly.
Mhm.
And that can mean get the right kind of mortgage. That can mean get the right kind of equity line so you can access your equity
Mhm.
before you need it. That can mean a lot of different pieces of it. How involved? So that's staggering. I've never heard anybody say 40%. I've asked that question a bunch of times, and it's usually 10% or zero. I often get, I know we should do more, but I don't, and I'm available to do them.
Mhm.
So, well, let me go back then. Let's talk about education. How do you educate your realtors? What's that look like?
Well, I think how I like to educate the realtors is they have to understand exactly how it works, right?
Mm-hmm.
So if I stand up with a PowerPoint, they read it, they don't pay attention, but I'm visual. And I believe that most people are visual.
Mm-hmm.
So I come with my props and I show them with my props how the product works.
Mm-hmm.
And they get it. And usually by the end of my presentation, they have no questions.
Wow.
Yeah.
Wow. And so is this something you offer like for teams when they do staff meetings, or how do you
Yes.
get involved?
Yes. And I will travel, like to California or in Arizona, states where I'm licensed to do loans. I'll go and I'll do presentations for offices.
Wow.
And it's incredible because before I started with my props, people had so many questions. Like they were baffled. They really still couldn't understand how it works. But with the props, they could really see it because it was visual.
Mm. See, one of the things I tell people is when you're a senior buying a property for cash, oftentimes you're downsizing. So they're
Hmm.
selling. I have customers who move out of Pasadena or West LA and they're selling a property for $2 million. Maybe they have $1.5 million of equity. They're going to buy a house in Scottsdale or Florida for $800,000 or $1 million. They have the cash already. They already have other investments in many cases, don't really need the money.
Hmm.
I say to them, either way, get the line of credit at least so you can access your equity. Can you talk a little bit about what's the cost if you don't need the money now?
Hmm.
Of course, I mean, you don't want to borrow money when you need it. You want to borrow when you don't need it.
Right.
What's the cost of setting up a reverse for purchase line of credit when you don't need it? What's the actual cost out of pocket to do that?
Well, so if to do it for a purchase, right? It works differently than if you already own the home, right? So let's say you're going to do a reverse of purchase and you want to set up a line of credit. Okay. So what happens is that for the reverse purchase, you'll come in with a specific amount down payment, and we're going to give you a loan for the balance to make up the sale price. Now, if you want to set up that line of credit, you would do what we would call overfunding the reverse mortgage. So you'll bring in more money than what we require you to bring in. And that money will automatically go into the line of credit. Now, anytime you make a payment to the reverse mortgage on the adjustable rate loan, it will go into the line of credit. So you'll have access to it again.
The big advantage I see of doing it at the time of purchase is you're already paying for escrow and title when you're buying the property
Mm-hmm.
versus on a refinance. If you just decide to set up, let's say you buy the property for cash and a year later you want to set up the loan, now you're kind of paying for escrow and title on
Again.
your own a second
Mm-hmm.
time.
Yep.
Number one. Number two, you have to go through the procedural process of doing it versus doing it
Mm-hmm.
setting up. So if you don't need the money, it seems to me the opportune time to set up is at the time of purchase.
Absolutely. But even if you intend, right, to set up that line of credit in the reverse mortgage, right?
Mm-hmm.
But you're unsure with the new move, how much money you're going to need, how much really do you have to
Mm-hmm.
overfund, as we say.
Mm-hmm.
You could do on the adjustable rate loan only, you could do it and just put down the minimum amount. And then in 3 months or 4 months, when you realize, what you can pay into the reverse mortgage and it will go into the line of credit. So you can
Got
build
it.
it up that way through monthly payments if you wanted.
So unlike a regular mortgage where once you prepay a substantial amount,
Mm-hmm.
you're lowering on a regular mortgage, you're lowering your interest costs.
Mm-hmm.
Most commonly, it doesn't change your monthly required payment. Now, there are some exceptions and there's ways to work that, but generally speaking, your payment doesn't change with a large prepayment of principal. But on a reverse mortgage, you can make that prepayment and then turn around, later and pull it back out if you have the line of
Correct.
credit set up.
Exactly. Once if you pay cash, right? And let's say in 3 years from now you need money, you're going to have to do a refinance cash out, which is going to be a higher rate than just a rate and term on a traditional loan.
Higher qualifying, cash out
Yeah.
is much stricter underwriting than a
Yes.
regular refinance, which doesn't make sense in some cases.
Hmm.
And you might not, maybe you're retired now, maybe you have no income other
Hmm.
than your investments, much harder to document, much harder to prove. Your income maybe later, and you've now foreclosed the opportunity to refinance because you're no longer as easy to qualify as before.
Exactly. And the nice thing about that line of credit is this, is that I get people that say, I don't need the money today. Right? Maybe they own their home now and they say, I don't need the money today. When I need it, I'll take it out. But in that case, if you take it out today and you don't need the money,
Mm.
your growth rate is, if your interest rate is 6%, your growth rate is going to be 6%. So when interest rates are high now, why not take advantage of that and let
Mm.
that money build up for when
Right.
you do need it?
If and when you do, and I think that's the
Yep.
key part. The other part is I think it helps transitioning out of the property, meaning I have cases where mom and dad are elderly and they're going to be moving in 6 months or a year. The nice thing about the reverse mortgage is they can take the money out and buy the next property. Now that causes a need to sell the house, but you can
Hmm.
do it in an early manner. They already have the equity out before they sold the property versus waiting till they sell the property. And then you have to kind of rush, the move out, the move in, it all kind of happens at one time. The reverse mortgage can be part of a strategy to help people make that like a two-step process.
Yes. However, if you're going to do a reverse mortgage on your primary residence
Mm-hmm.
to buy a new one,
Mm-hmm.
you know, usually they need to keep the loan on the books for 12 months.
Right.
So we kind of let people know, hey, you know what? You got to keep it for 12 months.
Right. Right.
Otherwise, it's an expensive loan, number one. And number two, it's whatever a loan officer or a company or the loan officer that you really liked working with, they would
Right.
come and take back their pay if it's less than 12 months.
But if you set it up 5 years ago, like I said, people
Oh
should.
yeah,
If
that
you
for
have if you have
no
a house with a lot of
problem.
equity, you should have a line of credit on it. And if you do,
Absolutely.
5 years later, and you decide, well, mom's gonna move out, she can
Yep.
advance the money, buy the cash property, and then in an early manner sell the house and pay it off. And
Hmm.
everybody's straightforward going forward.
Exactly. Right. Perfect. Hmm.
One of the areas that I deal with is reverse mortgage servicing. And I think one of the things that changed was it used to be the reverse mortgage companies were kind of consumer facing companies
Hmm.
that would do loans and kind of like a Bank of America, Wells Fargo,
Hmm.
had a relationship from both the origination of the loan and continuing. And
Hmm.
it seems like now the lenders all seem to self-servicing when it comes time to close out the loan
Hmm.
when the parties pass. And I've noticed that almost every single time it's a mortgage servicer who they're just going to foreclose. Like they're going to talk nicely on the phone, but they're going to move it forward.
Hmm.
And oftentimes families don't realize that it's not that you have to move the day mom or dad pass, but you've got to get a plan together within that first 30 or 60 days
Hmm.
and get the plan moving somehow so you can effectuate that. So when people call you and say, hey, mom and dad passed, I know you were the lender that did the loan, what's your best advice for them to make that transition as smooth as possible?
Number one, I tell them automatically get in touch with the lender because some people say, nobody knows, mom just, passed away, but you know what? They know right away.
Yeah.
Social Security, they know right away somebody's passed. So it's best to let the lender know mom passed, you know, immediately they send out a letter. It's not, it's pretty forceful, but it's for the purpose of contacting them and letting them know they will give extensions to it if need
Right.
be, right?
Right.
Basically, they just need to make sure that, if the person's deceased, taxes have to be paid, insurance still has to be paid, HOA has to be paid. They need to make sure everything is up to date, in order, and that you're not just deciding to live in mom and dad's house.
Right. That's their worst case scenario is
Yeah.
there's a child living there and they don't make a payment for 6 months. And then month seven, they get the notice of default and
Yep.
they're wondering what's going on. I think as a real estate agent, I often have customers call me and I say to them, let's take a look at it.
Hmm.
If the property is in a trust, then you have an administrator and you have a process that's been defined what to do with the property. If the property is not, it has to go to probate, and that
Hmm.
can take some time. And lenders are wary of that, and so it's important to get the right team going and contact the lender with a, hey, we're going to file. We expect to have letters in 35 days. I'll reach out to you when we have that because they want to see that you're actually taking proper steps. And so that's where
Hmm.
I kind of get involved with those servicers as
And I
well.
love that service, Bill. I love that service. I think every loan officer should know about it.
Mm,
Everyone should be able to refer you because we get people, kids or heirs, very stressed out,
right.
very stressed out over it at a time when it's very difficult.
Well,
And to have somebody to help them guide it.
part of the stress is I think that they like to live there forever and not make a payment. And in most cases, that's not an option. Particularly, there's
Yeah.
multiple heirs, it's never an option.
Hmm.
If they're the only heir, sometimes there's things that can be done. And those are kinds of things you also can talk about decedent, where they can have insurance, mortgage insurance that could pay off the balance because the kid's not going to qualify for the reverse mortgage. They're
Hmm.
not the same age. There's ways to plan for that ahead of time that can make that work. And so again, I urge people to reach out to your mortgage professional, reach out to your real estate professional, and anywhere in California, I'd love to help you. I actually have a national platform, and we actually work with reverse mortgage services across the country. So if I can help at all, please reach out.
I really
You,
do. And for anybody that has reverse mortgage and maybe for their family, I would really consider, because we got real estate agents that, get stressed out dealing with servicers. Yeah, I mean, I honestly see such value in what you're doing.
thank you.
Yeah.
That's really sweet. Well, Nina can be reached at simplereversemortgage.net. Simplereversemortgage.net. We'll put that in the description down below.
Thank
And
you.
Nina, I see on the website you have a learn more, get started, contact us button. So that's the best way for people to reach you?
Yeah, absolutely. You know what? Calling me is the best. I always have my phone with me. It's 480. Can I give my number?
Please.
480-635-2410. Even if you just have a question, I'm happy to
Fantastic.
help. Yeah.
Well, Nina, it's always great to talk to a professional. Really appreciate your time. And again, you can reach her at simplereversemortgage.net, and her contact information is on the website, phone number and email and such, as well as information about reverse mortgages. Nina, thank you so much for your time today. I really appreciate it.
Thank you, Bill. It's been great being here. Thanks for having me.
Sure. And for the rest of you, this is the Reverse Mortgage Podcast. We do this, we interview some of the top professionals in the country. We interview vendors to help support their business about reverse mortgages. It's an important topic, and I think most importantly, one where education can help people get the best outcome. You can continue the conversation on our Facebook page. The Reverse Mortgage Podcast is the name of the Facebook page. You can put questions there. If you're looking for referrals, great place to do that and to reach out. Again, I'm at Bill Gross Probate on social media. Thank you so much, everybody. Have a great week.